Welcome to The Explainer. Today we are breaking down the anatomy of a super breakout. We're talking about a stock that just went absolutely parabolic. So what on earth caused this huge surge? And, the real question is this the start of something big, or is it a trap for anyone jumping in late? We're going to let the charts do the talking. Okay, so here's the game plan. First, we're going to look at the breakout event itself. What actually happened to put this stock on everybody's radar? Then we'll get into the fun part. We'll look at the strong case for the bulls. And then we'll flip it and check out all the red flags waving for the bears. After that, we're going to map out the key price levels to watch. Think of it as the battlefield. And finally, we'll pull it all together for a verdict and a potential strategy. All right, part one. So what was the spark that lit this massive fire? Let's take a look at the event that has everyone talking. Wow, just look at the scale here. So on a normal day, this stock is trading maybe 23 million shares, okay? But then on breakout day, that number just explodes to nearly 383 million. That is more than a 16-fold increase. That kind of volume tells you that something fundamental has shifted. Big money and massive attention have just flooded into this thing. A move like this is impossible to ignore, right? It's like a magnet for traders. But hype is just hype. The real story, the truth, is always in the data. So let's dig in. With that incredible volume as backdrop, what are the charts telling us? Let's start by building the case for the bulls. What are all the technical signs that are just screaming, hey, this is just the beginning? Okay, first up, let's talk about a real classic, the 200-day simple moving average. You can pretty much think of this as the long-term line in the sand. It kind of separates bull territory from bear territory. Well, this stock didn't just cross it. It absolutely shattered its 200-day average of $1.34. For a lot of traders, this is a huge deal. It's like a giant neon sign flashing trend reversal. And look, it's not just that one signal. It's like the entire dashboard is lit up green. The ADX is reading over 30. That confirms this isn't some random spike, it's a strong trend. The Aron indicator, it basically says, yep, the buyers are running the show here. The MACD has fired off a clear buy signal. And maybe most importantly, that on-balance volume shows this move is backed by a huge amount of money. This isn't just noise, it's a whole chorus of bullish signals singing the same tune. So you add all that up, and the case for the bulls looks pretty rock solid. It's an open and shut case, right? Well, not so fast. See, that was only one side of the story. And any experienced trader will tell you there's always a counter-argument. So let's flip the coin and take a hard look at the red flags that are starting to pop up. Whenever a stock goes vertical like this, you absolutely have to ask that critical question. Is this a rocket that's got plenty of fuel left in the tank? Or is it more like a firework that's about to fizzle out? To help answer that, we can look at the RSI. The best way to think about it is like a car's tachometer. It's showing you how hard the engine is working. A normal reading is just cruising along, but a super high reading means that engine is revving near its absolute limit. And yep, as you can see, that tachometer is just pegged, deep in the red zone at over 81. Now, traditionally, anything over 70 is considered overbought. This definitely confirms the raw power of this move, but it's also a big blinking warning light that this engine is running super, super hot and might need to cool down. Next up, we've got Bollinger Bands. Think of these bands as the normal banks of a river, where the price usually just flows along. Most of the time, a stock will stay nice and contained within them. But right now, this river is in a full-blown flood. I mean, this is just wild. The price hasn't just peaked outside the bands. It is trading an incredible 146% outside of its normal range. It's like a rubber band that's been stretched to its absolute limit. And what happens when you stretch a rubber band that far? It has a nasty tendency to snap back. And often that snapback is violent. So we've got these two powerful forces pushing against each other. Incredible momentum on one side and extremely overbought conditions on the other. So where are the key price levels on the chart that are going to tell us who's winning this tug of war between the bulls and the bears? Okay, so here is our battlefield map. The bulls have set up a floor of support down below. They absolutely need to defend these levels, 180, 163, and that huge 134 level, the 200-day average. Now, on the other side, the bears are trying to build a ceiling of resistance up top, so you're going to want to watch for them to put up a fight at 259, 265, and that big psychological number, $3. The action at these levels will tell the whole story. All right, We've seen the bullish case, we've seen the bearish warnings, and we've mapped out the battlegrounds. Let's put it all together. What is the final verdict, and what's a potential game plan from here?
So the final verdict from the analysis is this. The bullish trend is undeniably strong. You can't argue with it. But the stock is extremely overextended. This isn't a red light, but it is 100% a flashing yellow light. It's a situation that just screams for caution. So, what's the play? Well, the strategy kind of splits into two different paths. If you're already in this and sitting on some nice profits, the overextended readings are kind of whispering, hey, might be smart to protect those gains. But if you're on the sidelines thinking about jumping in, the data strongly suggests that chasing the price way up here is a very risky game. A more patient approach would be to wait for a pullback to one of those support levels we identified, somewhere between 134 and 163 for a potentially safer entry point.
And that brings us right to the million-dollar question, doesn't it? Are we watching the birth of a powerful new uptrend, or is this just a spectacular but very short-lived flameout? The answer is going to be written by how the price reacts at those key support and resistance levels we just mapped out. That is where the story goes from here. Thanks for joining us for this technical breakdown, and as always, remember this is just for educational purposes, so make sure you do your own research before making any financial decisions. We'll see you on the next one.